So anyways, I was making a video earlier today, and I had to pause it for a long period of time. And of course, the whole like 15-20 minutes just disappeared. So no idea what I even talked about, but we're gonna roll with it. First things first, a little brief overview of what I initially was going to talk about. Number one, study. And the first thing, master the video course. Know everything about it. And if you think that you need to watch it once or twice, you need to really reconsider the whole thing. You're not going to learn it watching once or twice. I'll look at the slides from the video course. I created them through OneNote. Took the video. If this was a video screen right here and it was playing, I'd pause it, I would screenshot it, throw it in OneNote, and go to the end of the next slide all the way through the course. I mean, I did that over the course of several months, a couple of videos here and there. And now I have all the videos screenshotted. But it's very helpful. Next thing I've done is, let me pause the screen first. Here's one screenshot of, this is just part of the video. And if I go down here to kind of random 2.0, I've got all these questions, just all sorts of stuff. And, I have questions saved. And I just store it, and I store it for whenever the time is right. I'm going to do something with them, but I like to collect the information. I want to have the information for possibly in the future. So yeah, I've done even options. Here's an options course, and I wouldn't really even call it an options course. Really, what it is, it's just stuff Al said in the webinar all throughout time. Here was a question about liquidating options, 20% profit. Okay, hey, I don't even read this that often, but what I do is I just screenshot it. Here's some more stuff, and move on with it. I don't trade options right now, but I plan on trading options in the future, so I have it. I've also got, I have webinar videos from Al's Trading Room dating back to 2013. Probably from all the way to today. I mean, probably 3, 4, 5. Realistically, probably about 500 videos. Maybe a little bit more, maybe a little bit less. All on Dropbox in the cloud. And at some point, I'm going to comb through those videos throughout the years and learn what I can and really hone my skill on this. But none of that is as important as learning the video course. I'm just trying to store all that information, so when I know the video course front and backwards and could not learn anything else, that's when I'll start dissecting all the other pieces of Al's information. So some of y'all, and again, I'll watch a video. Recently I've been studying the reversals and major trend reversals just in the fundamentals, and one thing I've been doing, and really when I say that I mean the support and resistance chapter or a section, videos, 30 to 40, whatever they are. There's like 12 videos, or actually probably more than that, but there's it's got everything from support and resistance, reversals, major trend reversals, double tops, wedges, climaxes, and I'm really watching through those, and I'm even watching them at 2 times the speed. So there's nothing wrong with watching at 2 times the speed, and it's often, and what I mean by that is you can click down here, click the settings, change the speed to 2 times, twice as fast, and it's a good measurement. If you can watch it at twice the speed and still understand everything Al's saying and still remember it, that means you've got a decent knowledge on the video. So anyways, let's just chat about some markets, and as always, comment if you have any questions. This is the euro dollar. It was just on my trade station as soon as I opened it, so why not talk about it? What's the first thing that's important to me on this chart? Well, 2 things. We had a big gap up, or really just a big breakout, sideways for 20 bars, and then a bear breakout. This is a 2-bar reversal in some time frame. On some perfect time frame, it's a big move up, big move down. So, I can't really, since it's over the span of many days, I'm not going to go obviously bar by bar, but if I was long at some point, you got to get out of shorts. If you're long, first left should fail, no reason to sell. Maybe here, 3 pushes up, 1, 2, 3, bears get out. 3 or 4 bear bars, probably enough to make the market more likely a trading range. Probably enough for a second leg down, so not a great buy above here, not a great buy above here. Eventually you get this big bear bar and consecutive bear bars. At some point you're always in short, and you could sell, bet on a measured move, so sell here, stop up here, bet on a measured move down. Sideways from mini bars, we sold off, and do bears can get out there. Either way, the whole point is strong enough breakout. We do like this. Here's a sell-off, trend line break. So for any sort of reversal, you need a trend line break. Arguably 5 strong bull bars or 5 to 10 smaller bars. Here's 2 legs up, but it's all minor. And the reason it's probably minor, for a few reasons. This isn't that strong. It didn't break above the moving average. It barely closed this gap. This is only 2 or 3 legs down, 2 or 3 bars down, so it's not a major. A major reversal implies something that's major. It's significant. This is significant. We had a strong rally, multiple bars sideways, and then a strong sell-off. Here we have a weak rally, weak sell-off, another weak rally. Maybe this is enough for a major reversal, 2 legs up, or at least a trend line break, but we still need the sell-off and a retest of the lows. So if you're looking at this, you're saying, okay, maybe it's a trend line break. I'll look to buy a pullback, but the reality is sometimes when I make these videos, I just start yawning and it's hard to talk. But what I'm trying to say is you need a strong trend line break, and then you need a retest. And you don't want the retest to be too strong. You don't want it to last too long. It's kind of like this. So, look right here. Okay, we have a trend line break. Okay, strong rally, and we have a retest of these lows. This retest is so strong that this is probably minor. Now we have a strong rally, and then a retest down. And you can argue, okay, maybe this is a major trend reversal. It's possible, but it's only a few bars up. It's only 1 bar down. If you did buy, you expect 2 legs up. First leg, pull back. Second, probably get out there. And if not, probably get out there. Then you have this, a strong sell. Okay, reset the count. Now I need a new leg, trend line break. Here's a trend line break, but it's only a few bars up, no real consecutive bars. Now we have another strong sell-off. So at some point, it's consecutive sell climaxes. Here, 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 and here. Eventually, you get a trend line break, retest, and then you just get this big outside up bar, and traders buy. So you need the retest, and a lot of bears, second entry short, wedge, 1, 2, 3, or just 1, 2, 3. It's also a double top with here and here. Bears will sell. 3 consecutive bear bars. Okay, still going lower. Is this enough for a retest? And it might be, but again, it's a major trend. It's basically a breakout mode situation. 50-50 chance you go down, 50-50 chance you go up, and we're just kind of selling off at this point. But anyways, what's interesting about the chart is this is fairly tight. If I go to a 60-minute chart, now look what we're looking at. Okay. Strong breakout, second leg down. We have a trend line break, and then we just kind of keep selling off. And arguably, at some point you have to say, okay, maybe this is some sort of measuring gap, which kind of was right here. Then you say, okay, maybe it was up here. And either way, arguably it was, but what's most important is you have a tight channel, and we're not getting above the moving average, at least staying above it. We did here, but we barely did here, didn't even really here. And 3 pushes down. Then we got the strong bear bars and a little bit more down. So we're going to get bear breakout below a bear channel. Now, the problem is, since this is a bear channel, this is strong enough to probably reset the count. Do I think we'll get? Do I think we'll get this? Well, I don't know. I don't think we'll get that. I really don't think we'll get that. I do think that we're gonna have to go sideways for many bars. So I don't think there's a huge rush to buy. I think this is more profit taking. And it's also, you have a big bear bar here. Traders expect a second leg down. Here's the inside bar. It's kind of a pullback. And the second leg down was this big bear bar here. I think traders expected price to pull back to this close. So I think that's really more of what this is. You're also far away from the moving average. So I think this is just a combination. It's you have, again, there's just nobody willing to sell down here. Let me put it a different way. Strong bulls are buying, and are some of them giving up? Yes, but they're not going to give up. When they see this, they're going to start buying, and they're going to buy lower. Strong bears are not selling here. They took the difficult trades. They sold here, they sold here, they sold here for a scalp. So that means you have weak bulls who, somewhere in here got out. And so really here's the thing. I mean, the reality is we're going to go sideways for probably quite a few bars. And the bears are going to see what the bulls can do. If the bulls can get a strong rally, then we'll probably get up to here. I think we will get up to here. The only issue is, it's a fairly strong breakout. And typically when you get these strong breakouts like this, they go sideways for a while. Even look at a daily chart, and there you go. It's kind of, now you got even a wedge bottom. So, it's very much, whoops, probably shows better on a weekly chart. We're getting basically a bear breakout below a bear channel. So I think it will fail, but, again, why buy right now? Let me go back to the 6-minute chart. Why buy now when you'll probably have to go up for a little bit and retest these lows? Why not wait to see the strength by the bulls and buy a pullback? Or if you're looking to sell, why not give the bulls a few, 10 bars, 2 legs up, see what they can do. All right, back to the E-mini. Six-minute chart. Tight trading range, sold off, tried to get a second leg, and gapped up. So let me just review. Well, heck, I'll start with Monday. So here's Monday. So very strong breakout, and by the way, this is kind of the risk for the, this is kind of like the euro. This is what the bulls are afraid of: strong breakout and just sideways to down. So, anyways, in the E-mini, we had consecutive bull bars, gap up, tight trading range on the open. Some traders will, they'll sell here, but again, it's fairly weak. And if you did sell here, do you get out of shorts above this bar? I don't think you have to. I think this is strong enough for a second leg down. We had the second leg, 2-legged pullback, moving average. It's basically a 50% pullback from this rally. It's also a trend line break, so you have a bear trend line break. You expect some sort of pullback in a major trend reversal attempt, which is what we have. So bulls will buy, they'll buy here, stop down here or here. And, at some point, you see a bear leg in a trading range, you expect a bull leg in a trading range. Why? Because think about the name bear leg in a trading range. A trading range implies both price action. You go down, then you go up, or you go up and you go down. So if this is a bear leg in a trading range, eventually we're going to have a bull leg in a trading range. If this is a bull leg in a trading range, eventually we'll have a bear leg in a trading range. So anyways, it's kind of one of those things where it's probably a reasonable buy if you use a wide stop scale in. I think it's, what's wide, I don't know, somewhere down here. I don't think you have to take that trade. I think a lot of traders, if they did buy, they'd get out below here, which is why you see this. A lot of bears that got out above will re-enter here, which is why you see that entry bar. Okay, so second entry buy, retest the low close, finding buyers, but why the tails? Possible 2 legs up, but it's a bull bar, probably not a good short. Kind of looks like we're getting a, arguably we have a breakout and a gap here. It looks like we're getting a breakout of a low 2. So here's a low 1, pull back a low 2. We're getting a bull breakout, so maybe some sort of measured move up to here. Now we have 3 pushes up, 1, 2, 3, but fairly tight channel. It's a micro channel with this. Probably not a great short. Bears probably need a micro double top, even though this is arguably a double top here. Did not trigger. Now I have a second entry short. Do traders get out? I think it's certainly okay to get out, but you got to wonder. We never triggered, and it's basically a tight trading range, so probably could be a trap. So 2 legs down. It's okay to buy, but you need a wide stop. I think 50-50 chance we fall below this bar. Okay. Now we have another double top, but again, tight channel, so basically a tight trading range. And you have to think, it's the 18th bar, so we're probably going to go above either the high of the day or low of the day. And since we're so close to the highs, we're probably going to go above it. Big bull bar. Okay, so big bull breakout. Odds are you'll get a second leg, but top of a trading range. So now you have a wedge, 1, 2, 3. This will probably be exhaustion, but again, odds are you'll get a small second leg up, which is that second leg, and then no surprise. Basically, you're trying to get a bear break up a double top. Tight channel, I think we will come down to this low, but not a great buy signal, probably going at least a little bit lower. And there you go. And pretty much trading range for the rest of the day, except for the end. I've got to cut the video short. I'll continue this tomorrow. Thanks.